This is Alan Bush with ADMIS. In the stock index futures, we did start out higher. This due to ideas that the European Central Bank and the People's Bank of China may ramp up efforts to stimulate their economies. Also, there have been follow-through gains with the reports that came out a little bit ago here in the U.S., including construction spending, both coming in stronger than anticipated. So good gains today in stock index futures. We continue to believe that the trend will continue higher all of this year or for the entire month of December and well into 2015. So the main trend for stock index futures remains intact, looking for higher prices. Over in the foreign currencies, seeing the dollar index trading higher. This seems to be mostly in reaction to pressure in the crude oil market. So there seems to be a very strong inverse relationship between crude oil and the dollar now, more so than at other times. We did have some pressure in the British pound after construction spending in the UK slowed at a rate that was more than analysts had expected, or a slower rate of growth overall. So that pressuring the pound. Also seeing the yen lower in what could be a delayed reaction to yesterday's announcement from Moody's that they are downgrading the debt of Japan. Also the Australian dollar lower after the Reserve Bank of Australia, although they did leave their interest rate target unchanged at 2.5%. Their accompanying statement was rather dovish, citing weakness in commodity prices. So that is the main reason why the Australian dollar is lower. Longer term, it looks like the yen can continue to decline, and it also looks like the Australian dollar most likely will continue to come under some additional pressure. Over in the interest rate markets, some selling today. This mainly linked to the two reports that we had earlier this morning here in the U.S. showing a better U.S. economy. So almost a full point down in the 30-year bonds. I'm thinking that if we can drop another point and a half, it will probably come in with a buy recommendation in the March 30-year bonds. That would be an area of support. So hopefully a little more weakness, and I think we can come in with some buying in the 30-year bonds. Longer term, still thinking treasuries are headed higher this year and well into next year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Medlin.